Hey everybody, Boris, SBK Forex. Welcome to the weekly technicals for the crosses from March 25, March 29, 2019. And on the crosses side this week, it's really going to be a yen story and a pound story, I think. Especially what's interesting to me, euro yen, CAD yen, both of them breaking massive, massive moves here in their own respective ways. High volatility in the euro yen, low volatility in the CAD yen, and now targeting some key support levels. Euro yen targeting 123, CAD yen targeting 81, and then Pound Swiss, to me, looks like a very interesting upside story here. Remember, Pound Swiss is effectively sort of a euro pound inverted, right? And so bullish pound, negative euro in a way, in a kind of a circuitous way. But when you look at the charts here, it looks very, very positive to the upside. Let's take a look actually at all the charts right now and see how they shape up as far as the yen risk goes. So first of all, let's take a look at the euro yen story, because to me, that's kind of the currency cross of the week. Look at this massive break. We're literally taking out like 3 months worth of lows here in this one single candle. That's brutally, brutally strong. Now, last time we had a big down move, there was a big retrace. This was essentially, I think, the equity market fall off and the equity market comeback. I don't think we're going to be getting the equity market comeback. We've had the comeback now. You basically have to bet on the fact that Dow is now going to go up to like 27, 2800 after just kind of flushing out over here. That's a very, very unlikely scenario because it essentially bets on an incredibly soft landing and a comeback in growth everywhere across the globe, which doesn't seem to be happening. What I think is much more interesting is that we broke all these lows here. We may have a little bit of a retrace back up towards the 25s, but anywhere between 24 and 25 is probably going to be a great scale up short into this trend. If it goes through 2600, even if it just simply takes out the 2650s, I would say 2650 would probably be your terminal stop here. That still wouldn't necessarily negate the negative trend, but it would be enough for me to take me out of the trade. But that's a big move from here. I think, at most it goes to 25. You can establish scale in trades around those levels, and I think ultimately we could see 23, maybe even 22. Remember, the fat finger low was all the way down to 118. That's not anything you want to project right away. But one of the interesting things, by the way, this is kind of actually cool. So you could look at the fat finger low and say, oh, this was just simply, computer error and the algos were wrong. But you could also look at it, which happens quite a lot, that these kind of fat finger, signals may take 3, 6, 8 months to mature, but they were in fact signaling the risk in the market way ahead of time. And to me, if we start moving towards the low here, this is essentially going to be a very big magnet. This essentially is going to be telling you this is where the markets should be heading to. So right now, the clear bias, the clear bias to the short side is definitely in the euro yen. I like this trade probably the most amongst all the crosses because of its clean, clear structure. Next, let's take a look at the CAD yen. And it's a similar story, just sort of a lower volatility trade here. Look at this, ending on the lows, massive move to the downside, same kind of thing. We crash multiple, like 8, 9 weeks lows out of this move. The support here comes in around 80, 81 effectively, maybe a little bit higher than that. This is a much lower volatility way to participate in the move here, but there's still, I think, certainly quite a lot of ways to go. And ultimately, of course, this can also go towards the 78s. Similar kind of a story, just sort of a slower signature profile. The stop to me is around 84 here. We go back up 84, that completely negates this whole structure. Do I think it's possible for us to retrace? Certainly. But again, similar kind of a story here. The retrace here would essentially give you a scale up position to about 82.50, 82.75 with a 83.50 stop, and then you should be relatively well positioned for the next leg down. It's going to be hard to say whether we're going to have a retrace or a continuation. That's why I think you have to trade both of the yen stories in small scale up positions where you take an initial position. If it works, great. If it doesn't work, you have to scale up a little bit to average out and blend out your prices. And then finally, the next trade that I want to take a look at was the pound Swiss, right? Here's pound Swiss. And pound Swiss is quite bullish here because, first of all, we held the 500 SMA, the long-term move. Now we're still underneath the 20 SMA here, but this is a big bullish reversal candle. We took out the highs of the prior candle, right? Closed above the highs of the prior candle. Nice big reversal ahead of the 500 SMA. It feels like it wants to at least reach out towards the 20 SMA here at the 32.14s. I like this trade with essentially the stop underneath the 500, around the 2900. If we break that, that of course becomes a failed move. But for now, it looks to be an uptrend with a bounce off the key moving average support. This is essentially the benign Brexit scenario. That would be the proper way to trade this. The benign Brexit scenario here puts us on the path towards higher levels as we go in the week forward. Wish you guys the best luck, the best of trading. Boris Schlossberg, over and out.